Hey there everyone, John.Hunter, your mortgage hunter, coming back to you again with another rate update, this one for the week of March 28th. So I can't believe the first quarter is already over, but we're right there, right? A couple days, it'll be April 1st. So kind of crazy how things go so fast. Well, this week, rates were pretty flat, maybe up just a tad as the Fed continues to wait and see. But, you know, the news of the week, I believe, is that the consumer confidence is way down and everybody's getting a little nervous about that. So 30-year fixed is around 5.99 to 6.75. We've got 15-year 5.375 to about 6.25. FHA 5.99 to 6.75, VA 5.75 to about 6.75. Rates are definitely down from where they were 60 days ago. We're actually in the fives on the low end of things. So that's actually, honestly, is trending in the right direction. Oh, down payment assistance, 6.375 to about 7.5. Remember, guys, these rates are driven by credit score, loan amount, loan type, whether you're a first-time home buyer. There's so many different variables here that affect it. Property type, right? All of that affect what rate you get. If you want an individualized quote, please just reach out to me. If you have a rate target and you want to be notified when it hits there, also reach out to me and I would be glad to set you up on a alert to let you know when it hits there. Just like in September, you know, rates got down almost 0.5% lower than we are today, but it was only there for 2 weeks. So, you know, timing is everything sometimes. Anyway, consumer confidence this week is the big number, I believe, because remember, the economy is all driven off of spending, right? And the more confidence consumers have, the more they spend. Well, consumer confidence came in with a score of 65.2. The reason why that's important is any number at 80 or below is typically seen as a trigger for recession. I've been talking about recession for months, actually even longer, because all of these signs and warnings have been flashing forever, and it's on us. You know, consumer confidence is definitely a big one. I mean, that in itself can trigger a recession, honestly, and 65 is a pretty low number. Anyway, another one that I thought was really interesting is that they did a poll for Americans and asked them if they had an emergency or an unexpected expense, could they come up with $2,000? Do they have any savings? Could they come up with it if they had to? And honestly, only 67% of Americans said that they could handle it, an emergency of $2,000 or more, or actually $2,000. So that's kind of a scary number, really, if you ask me, that 33% of Americans couldn't handle a $2,000 expense if it came up. I think that also is a sign of a recession coming when people are tapped out. You know, the inflation has just killed everybody. So I think the idea and the news out there about a soft landing happening, I think that fantasy is over at this point. I would hope so. It was always a fantasy. They've talked about it. It's 30 years I've been in the business, and I've never seen it. So I don't think it exists. It's a unicorn. Anyway, there's two important reports that come out next week that are employment-based. One is on Wednesday, one is on Friday. I think they have the chance of moving the market. That is the data that Fed is waiting for. Remember, the Fed's dual mandate is for lower inflation and maximize employment. Employment was what holding the Fed back for a while now. And hopefully maybe next week we'll move the needle, continue to trend down, which I believe that trend will continue. Thing is, I always warn people is it's not, when the trend is continuing, it's going to go down. It just may not be in a straight line. So that's what I'm here for. I will keep you up to date on all changes. Please reach out, like, share would be great, and have a wonderful weekend. Bye-bye.